The Chinese economy seems supported in the very short term and maybe plateaued a little bit. What about the German economy? Again, bad data this morning. Does that concern you?
It does concern me. When you have negative yields, that says something, doesn't it? So I think that Europe is really, in some respects, being held hostage to what's happening in Brexit right now. Investors need to be really, really aware of where the revenue for the companies they own is coming from. Don't just look at where a company is domiciled. Nestle is a Swiss company. What percentage of the revenue they get from Switzerland? Not a lot. So you want to look at companies that are levered to European. You want to look at companies that are levered to European earnings, German earnings in particular, and be aware of those in your portfolio strategy.
I think we should hit, Karen, on the market action today, the weakness in FANG. I mean, Facebook, Netflix, Alphabet, they were all lower. Whether it's this news of the new AG's investigation on Google, Facebook and Google.
Right.
I mean, it just keeps coming.
It keeps coming, although they kind of cycle and then they sort of go higher. I think that the AG news it's out there, it's negative, it weighs on the stocks for sure. And it's going to be a little while till we have more. What I like to base investing on is how are the earnings? So we're not going to see that. We're in a little bit of a, we're not going to see it again until next month. So I still like them a lot. I think they represent tremendous value, Facebook and Google. And Netflix, I think, is very specific, as we were talking the last hour about the Disney story and the oncoming threats there, and the valuation maybe being too high for those threats.
Now, National Economic Council Director Larry Kudlow spoke out earlier on Squawk on the Street. Here's what he had to say about the August jobs number.
130,000 is a very solid number, but August is always a quirky month. Usually the print comes in too low for seasonal reasons, and then it's revised up. Household survey up 590,000. It's an unbelievable blowout number. Civilian labor force picks up by 571,000. All I want to say is America is working.
Mike, your take on not just a number, his take on it, and it sort of fits the narrative that's going to get the Fed rate cut that they want, but doesn't derail the economy.
The numbers themselves fit the narrative, yes. Larry is correct that August is often a soft print on the initial. The household survey is massive margin of error. There's a reason we don't look at the job creation based on the household survey. And the bond market, by the way, did not say that this was a blowout number. I think it's pretty steady as she goes on the labor front. Among the things to worry about in this economy, the market for employment is not really the first or second or third thing.
Well, it's lagging indicator, right? It's a lagging indicator.
It always is, yeah.
I think, Michael Yoshikami, September is going to be a really interesting month because it'll show, A, whether this August weakness point is true. And also, I mean, the surprise tariffs and more tariffs actually came toward the end of the month. The hiring in August, early August, was a kind of different climate than later in August.
Yeah, I think tariffs are going to have some impact, Sarah, but I think it's going to take some time. Companies at this point are essentially eating these tariffs, so I don't think it's really a headwind for consumers beyond the sentiment number. But you're right, September is going to be an interesting number, but I agree with what Mike said. I think it's a steady as you go sort of economy, nothing exciting. I think it sets us up for a quarter point in September, and not much more beyond that unless something dramatic happens, and particularly if there's some sort of settlement, which we expect there to be some initial settlement in October during those trade discussions.
Michael, I read from your comments that you're into dividend stocks at the moment overall. Give us a couple of names that you've topped up on recently.
Yeah, I think there's a couple names that are interesting to look at. First of all, you want to look at Blackstone. Blackstone is an interesting name. It's really essentially private equity. But here's the thing about Blackstone that investors need to be aware of. This company pays out 85% of the money it makes basically in dividends. You ready for this? Right now, it's paying out a dividend over 4%. What's the 10-year Treasury paying right now? And will Blackstone be higher in 10 years than it is today? I think probably so. Secondly, you want to look at a company perhaps like Walmart. Remember, it all depends on your own situation, but Walmart is a company during the financial crisis when the stock market was down 35%. Walmart was up 15 or 20%. Why? Because when times are tough, people buy cheaper products, and Walmart sells cheaper products. So those are a couple names that I think investors ought to consider looking at in their portfolio strategy.
Walmart's done well in a strong consumer environment here as well. Karen, is that one of yours?
Yeah, I like Walmart. I actually own Target because it was cheaper, but they've both done a tremendous job. And Walmart is, I mean, the momentum doesn't seem to be stopping. It seems to be accelerating.
We will leave it there, guys. Thanks very much. Karen Feineman, Michael Yoshikami. So to come here on the closing bell, former Dallas Fed President Richard Fisher will weigh in on the economy and tell us whether Fed Chair Jay Powell gave new rate cut clues in today's speech. We're back in 90 seconds.
At Tesco, we can pop our pasta in your Astra, our Red Leicester in your Fiesta, or our mayo in your Mondeo. All you need to do is try Click and Collect. Just go to Tesco.com, order your shopping, then click and collect. With the minimum basket spend now only £25. And if you fancy something a little more exotic, we can even put our pad thai in your Qashqai. Try Click and Collect at Tesco.com. Every little helps. Selected larger stores. Booking charge may apply. See online for full terms and conditions.
This one shouldn't take long. Of course, if it had a cover, I might not be bothered. Can't see what's under there. And then they'd have chained the back wheel. It would have taken me much longer, especially if the chain's off the ground. Makes it harder to cut. This one doesn't even have a lock on the front. So, in the time I've been talking to you, I've nicked it.
Over 9,000 scooters and motorbikes were stolen in London last year. Lock your bike, chain the rear wheel, and cover it to make it harder to steal. Lock, chain, cover. The Met Police.
Casa Bacardi is back, bringing a party with an unmissable lineup and tasty rum cocktails to London. With Bacardi's new Sound of Rum crew, featuring live sets from One Asen and P Money, MCing from Harry Pinero, and loads more. The perfect recipe for an epic night out. Casa Bacardi at Box Park Croydon on September 14th. For more info and to get your tickets now, head to boxpark.co.uk. Do what moves you. Over 18s only. Drink aware for the facts.
Welcome back. Wall Street posting its second straight week of gains. Courtney Reagan is wrapping up the week's big winners here at the Stock Exchange. Frank Holland will do the same from the Nasdaq. But Court, let's start with you.
Thank you very much, Will. So stocks higher for a second straight week here, though. Kind of close there at the end for the performance today. The Dow gaining more than 1.5%. The S&P 500 up about 2% for the week. Much of the gains, of course, on hopes for some kind of agreement to at least quiet the trade war when the U.S. and China meet coming up next month. Retailers have made a lot of headlines as trade war casualties, but with possible hope for a deal, retailers are gaining, having a pretty nice week overall at more than 3%. Tapestry is leading the S&P 500 for the week. The company also announced a new CEO Wednesday, longtime board member J.D. Zeeland. And Calvin Klein, Tommy Hilfiger parent company PVH, the second best S&P performer this week, up 12%. Tyson Foods, the S&P 500 laggard, down 7.5% after warning that it will miss forecasts. Sarah, back over to you.
Courtney, thank you. Have a great weekend. Let's see what drove the NASDAQ this week. Frank Collins with the highlights. Frank.
Hey there, Sarah. Really a kind of a mixed bag, but we have to start off with one of your favorite stocks to cover, Lululemon. Those shares up this week exactly 10% after better than expected earnings and strong guidance going forward. Also, really a great week for chips. Those improved about 4.5% this week. Really on that trade optimism, we're talking about Western Digital, probably the best, definitely the best performer. Shares up more than 8.5%. Also a pretty good week for consumer and retail stocks. You have to look at Dollar Tree. Those shares a nearly 8% higher. Also a surprisingly strong week for transports. American Airlines really having a boost after Deutsche Bank said it's in great position to take advantage of the return of the 737 MAX when that returns to service. All around kind of a mixed bag for the NASDAQ. Back over to you.
Frank, thanks very much for that. Now, Fed Chair Powell making his latest public comments earlier today. And Steve has the highlights for us. Hey, Steve.
Hey, Wilf, good afternoon. Fed Chairman Jerome Powell, speaking in Switzerland, asked directly by an audience member what he was going to do with interest rates, and let's listen to his response.
We're watching all of these developments, the geopolitical risks. We mentioned Brexit. There are others, the events in Hong Kong. Watching those carefully, watching incoming data, and really looking at financial conditions broadly. And we're going to be assessing those as we go into our next meeting and future meetings. And what we've said is that we're going to act as appropriate to sustain the expansion.
Did you hear it? Well, markets heard, and many believe the chairman is leaning in favor of a September rate cut from that response, and others as well. Powell's comments came after the jobs report, which he said showed a healthy job market and underscored an outlook for a solid economy. He played down recession fears, saying it was not a likely outcome for the U.S. To the extent there are risks, Powell said interest rate policy, quote, will address them, Sarah.
Steve Leisman. Steve, thank you. For more, let's bring in Richard Fisher, former president of the Dallas Federal Reserve. So do you agree with that market interpretation, Richard, that when Powell says he's going to do what's necessary to sustain the expansion, that means more rate cuts are on the way?
Sarah, I used to always feel that when the Fed chairman made an announcement or when we made a decision at the FOMC, it was like the Aztec sacrificial ceremony. The markets slice you open. They try to read the entrails, figure out exactly what's said or what wasn't said, try to infer what they want to hear or what they're worried about hearing. I think Powell handled it very well. He didn't say a thing, which he shouldn't. I don't think there was any indication whatsoever as to which way they're likely to go. Of course, we all assume they're likely to do a quarter. I think the idea of a 50 basis point cut has been thrown out the window, but it's not clear. And remember, they have a limited number of pennies in their purse. They've only got so many cuts to offer before going back to the zero bound, which nobody really wants to do. And they don't want to even think about going negative. So nothing was said today. I wouldn't have expected anything given my experience on the FOMC. I think he handled it very well. And very importantly, Sarah, he punted away and put to bed the indiscreet comments that my former colleague, the former head of the New York Fed, Bill Dudley, had made. So I thought it was a good speech, and that it was good because it didn't say a damn thing. How's that?
What Richard, want to come to the Dudley comments in a moment, but sticking on the content of the speech for a second. I mean, clearly he was quite relaxed or struck an unconcerned tone about the U.S. economy. Right. Also did so for the international economy, saying he didn't see a global recession coming, and yet that has been one of the reasons used both by him and by market followers as a justification for a potential rate cut to come. What did you make of that lack of concern about the global economy?
Well, I don't think they've used the word global recession. They've certainly talked about a slowdown. We know that Germany's struggling. We know that the Chinese economy has slowed down. We know that Europe's in duress. The EMs, particularly Argentina and so on. As I've said many times, the U.S. is the best-looking horse in the glue factory right now, and we keep moving forward. So remember, he has to manage to the U.S. economy. That's the charge you're given by the authorities that gave the Fed their license, the Congress of the United States. And yet at the same time, you can't ignore what's going on around you. But as he summarized, the U.S. economy driven by consumption, and, of course, strong employment numbers, even though the August numbers are always a little bit iffy, is still doing well. And that's what his job is. You can't ignore the international economy. You take it into account as to how it impacts the real economy of the United States, not just the markets. You manage to the real economy, and I thought it was a pretty optimistic view. I may not share that optimism fully, but nonetheless, it was pretty positive, and I think now the question is, will they move on September 16th and 17th or not? And then what happens afterwards? I think the jury's out right now, although I do expect a quarter-point move.
I mean, yeah, the market's at nearly 100% of the quarter-point move in September, Richard. The question is October.
Sarah, remember, Sarah, the markets have never been accurate in forecasting what the Fed's likely to do, nor has the dot plot ever been accurate in forecasting what the Fed is likely to do. So
the dot plot for sure, but Richard, what would happen to the markets if the Fed didn't deliver a cut in September?
I'm sorry. I mean, you don't manage to the markets. You manage to the real economy. That's the way it works.
Do you think all of the people on the Fed agree with you on that? I'm not sure.
No,
that
I think
it feels like the Fed
Sarah, there's a division
does get anchored by the
there's
markets.
a division of opinion.